What is going on, apes? We have a huge video to get into. We need to go over the Ortex data, dark pool data, Stonko tracker data, and the technical analysis to let you guys know what we currently look like for Tuesday and going into the rest of the week, because I think our cause here is getting even better by the day and will ultimately lead to a bigger short squeeze and a gamma squeeze. But keep in mind, these are only my opinions. I'm not a financial advisor or a financial planner, so keep that in mind throughout this video, as well as make sure to hit that like button and subscribe to the channel for more videos like this and to ultimately help push this accurate information out to as many apes as possible that do need to hear this. Now, getting right into the Ortex data, guys, for today's changes: short interest change of positive 0.65%, return shares of 6.16 million, borrowed shares of 6.76 million, so that is a borrowed change of 600.06 thousand shares. So that is actually a gain for the day of over 500,000 shares. So that is helping our cause right here once the squeeze actually does start. Current short interest percentage of free float at 14.08%. Current shares that are sold short of 72 million. So this has been going up, especially over the last couple of days, and really over the yesterday's video we went up almost 5 million shares that were totally sold short, right? So that is a huge gain, and over the past week we have seen a massive increase from about 11% short interest to 14% short interest. So we're going to want to see how these next couple updates do start to come out. Really, once we're at about Thursday, we will obviously have the data for today, and that'll be important because we did have a 5% positive day. Now, I don't think shorts are covering, but if we can see what legal short activity is doing, right? The Ortex data only reports legal shorts, then that'll give us a more clear understanding of what is actually going on behind the minds of the short sellers right now. Also, something else I want to point out to you guys: the share utilization is at 94.28%. 7 days ago was at 82.90%, and the short interest has only went up about 3% since then over the last 7 days, going from about 11% now up to 14%. So this does signify, one, it's harder for hedge funds and institutions that want to sell shares short in AMC to actually get their hands on them, thus implying that people that do own these shares that are willing to sell them out, they don't want to as much or as frequently as they did before, implying that they might think a bigger move is coming to AMC. Now, the failure to deliver numbers have not came out yet for this last gamma squeeze that we just seen, running up from about $14 to about $73. We all know the story there. I think we went about $77, somewhere in between there, but we have not got this data yet. So when that comes out, we will see exactly what pretty much the naked shorting activity has been going on in AMC, and I will be the first to report that to you guys. Now, AMC, the Stonko tracker data, this is where it gets very, very interesting, and this is what I've been calling out on this channel quite often. The in the money contracts for this Friday at about 83,000, the out the money contracts at 266,000, almost 267,000 contracts. Now, the in the money contracts, right? It does matter what is in the money, but once you do get closer to the expiration date, the out the monies really do matter. Now, keep in mind, not all open interest are actual contracts that are, being hedged for by hedge funds and institutions. We actually account for open interest. If you sell a call or sell a put, whatever the case is, that does account for open interest. But how delta hedging works, if you have a 0.5 delta on a call, you're gonna have to buy that same amount of shares to basically hedge and try to get a delta zero. So you're not really winning too much, you're not really losing too much. But when you're delta hedging, you have to kind of redo your position a lot, right? When it goes up a lot or it goes down a lot, you really have to try to stay at delta zero, and that is hard to do. You have to keep fluctuating between buying more shares, buying more options. So that is basically what the hedge funds are doing. So once you get closer to the actual expiration date, you're gonna see a lot more actual hedging that does go on. So like I said, in the money at almost 83,000, out the money at 267,000. We're gonna want to see these in the or out the money contracts go in the money, and then we're gonna want to see that in the monies obviously would go deep into the money. Now, it does look like even a quite substantial amount of people are going into the June 2nd contracts, and we already see about 125,000 in open interest in people's brokerage accounts for that July 2nd expiration date. But this Friday is going to be huge, guys. If we see a big rally and we can continue from the momentum we've seen today, going up 5%, if we could hit another 5, 10, 15% day tomorrow, that will be very good, because we have well over 300,000 contracts. Rough math here, about 345,000 contracts that are in the money, way less than we've seen last week, but you're seeing a huge increase for this week as well, and most of these are out the money. So like I said, Wednesday, Thursday, and Friday, those will be crucial days to see how many out the monies actually go into the money. Now, looking at the dark pool data, keep in mind this is an aggregate number, so this is a running total. Net short volume of 18,363,533 for the day. Net short volume of 1,070,000,000 for the day. Position of 546 million. 452,551 shares sold short. Position amount of 28,264,000,000. Keep in mind that's a running total, guys. So that is not actually what was done today. That is just a running total of that information. Now, and as we can see, it's pretty much going up significantly every single day, and it's take this with a grain of salt, though. It's not really proven. It's hard to get the exact data from the dark pools, right? They're dark pools for a reason, so take that with a grain of salt. It's good information to know, but I wouldn't bag off of it being 100% correct. And I pointed that out in tons of videos before, and if you guys have any way to debunk that or prove that to be true, let me know down below in the comment section. I will for sure make another video about that. But what I do want to point out here is we were up 4.63% on the day, and after hours down 7 pennies, 0.12%, so pretty minuscule there. But we are in this overall uptrend, and we did dip under this trend line, and we were riding this until about midday, right, when we really started to get some gas to the upside, and we are pretty substantially above this right now. To go back to this trend line, you're going to be looking at about $56. So as long as we stay above $56, then we're still in this bullish trend line. Even if we don't, we'll really have to break under $50 to go into a bearish type movement. So the technicals do look very, very good. The 50-day moving average is at $58. $58.17 current. No, $57.70. We're like right on our 50-day moving average, so that was very, very hard to see. I had to zoom in a lot to see that, but no, we're currently at $58.17. So we're about 47 cents above our 50-day moving average, which is a clear bullish sign. So if we get some momentum above there, that'll definitely be good tomorrow and throughout the rest of the week. Now, something I really, really want to point out to you guys, and this is the first thing that caught my eye, is we have this huge resistance level. We've seen this right here, 1, 2, 3, 4 tops at about this 63.50, 63.70, in between about $63 and $64 ultimately. You could plot it anywhere you want, but that's really where you start to see some major resistance. Now, if we can break above that and actually close above that and even potentially go to about $70, that's where you're going to see a lot of steam, a lot of margin calls, and forced liquidations that are going to start happening with AMC. Now, I don't like to acknowledge the only the upside, right? I like to acknowledge and be real with you guys the potential downside as well. I don't personally see it, but if you guys want key levels to be watching for, it's going to be about that $51 mark, and then break that to $50, and then the $48 mark. Under that, your next support level is not until $41. So I don't think we're breaking under that $50 mark. I would be very, very surprised, even considering this bullish uptrend we do have. But overall, I do expect a break to about the $63 price point, which is not too far away. It's only about $5 away. So that could happen relatively easy. And once you do break out of that, you're clear to go back to the mid 70s range, right? We don't have a resistance level over the $63 to $64 range. So all does look good there. Let's take a look at the volume for the day, see what that's looking like. We had volume of 168 million, which is even significantly down from yesterday. We were at 184 million. Day before that, 242 million. But this is not the lowest volume day we have seen. It's close, but we've seen 146 million in volume. Day we dropped 10.37%, and that was June 9th. And then we've seen another lower day than this, only by 3 million shares. Volume was at 165,000. or 165 million, that'd be crazy, and that was June 16th. So as long as we can see this volume actually start to increase, that will be a number one factor as well, or a close number one factor I would be looking at. Now 200-day moving average currently at $43.09, so I do think that's your lowest case scenario, and like I said, that pretty much puts us at about this $41 range that I was talking about. So I don't see much potential downside here, if at all, to be honest with you guys. Far as the option chain and what this is telling us, guys, like I pointed out on this channel many times, at the $60 strike, we have about 25,000 in open interest, and then it's about every $5 after that, right? Increments of 5. So 60, and then 65 we have 18,000, and then 70 we have 19,500, and so on and so forth, right? And then 75 we have 6,000, 80 we have 21,000, 85 we have 3,400, 90 6,400, and 100 we do have 21,598 contracts. So you're really going to want to watch those increments of 5. Once we break 60, you're going to want to watch for that $65 break, and that can add a lot more potential delta hedging that is going on by people that are selling these options short, by hedge funds and institutions. So that is going to wrap up this video. Hopefully you guys got some great information out of it. Make sure to hit that like button and subscribe to the channel on your way out, and if you want to get up to $70 in your choice of free stock, make sure to check out the link down below for Public. They do not route your order flows to Citadel or other market makers or whatever the case is. They don't do that. So if you guys want, might as well roll the dice and see what you do get. You get your stock instantly. Like I said, no need to even link a bank account or deposit a single dollar. Also, check out the link down below for the buy and sell alerts. They literally pay for themselves, and we have been killing it over there. So with all of that being said, I will see you guys later. Take care.